Ladies and gentlemen, konnichiwa. I'm Joyce Ho, Principal Representative of the Hong Kong Economic and Trade Office, Tokyo. On behalf of our office and Invest Hong Kong, I'd like to welcome you all to today's webinar on Hong Kong as the Green and Sustainable Finance Hub, Investments with Returns and Purpose. Today, we have more than 300 participants. This has shown the keen interest of our Japanese friends in the opportunities arising from Hong Kong, not only as an international financial center, but also as a green and sustainable hub. So today we are pleased to have three speakers from Hong Kong and Japan, including Mr. Christopher Hui, Secretary for Financial Services and the Treasury of the Hong Kong Special Administrative Region Government, Ms. Tracy Wong Harris, Head of Sustainable Finance, Greater China and North Asia, Standard Chartered, Vice President and Deputy Secretary General, Hong Kong Green Finance Association, and Ms. Sachie Yi, Head of Sustainability Strategy Development Office, Sustainability Promotion Department, Mizuho Securities Company Limited. We are also pleased to have Mr. Hideki Takata, Secretary General of the Green Finance Network Japan, to moderate today's webinar. Last but not least, I'd like to thank our supporting organizations, including Green Finance Network Japan, Hong Kong Green Finance Association, Japan External Trade Organization Hong Kong, Keidai Land, Keidai Do-Yukai, Japan Chamber of Commerce and Industry, Hong Kong Japanese Chamber of Commerce and Industry, Japanese Bankers Association, Japanese Security Dealers Association, Japan Investment Advisors Association, and Hong Kong Trade Development Council. So without further ado, I would now give the floor to Takada-san. Takada-san, please.
Thank you very much. So now let us start the panel discussion. My name is Hideki Takada. I'm the moderator of today's panel discussion. I've been working for the Ministry of Finance of Japan for more than 25 years. From 2015 to 2018, I was seconded to the OECD in Paris and engaged in green finance. After coming back to Japan in 2018, alongside my official job, I launched the Green Finance Network Japan, and I'm operating it as a Secretary General. I'll talk about it later on. As introduced by the organizer, today we are very happy to have three distinguished panelists from Hong Kong and Tokyo. And including myself, we've got four speakers, two each from Hong Kong and Japan, and also two from the government side and two from the private sector side. So from now on, I will ask each speaker to give a short presentation, and then we will have a moderated discussion followed by a Q&A session. So the first, Christopher, could you kick off, please?
Takata-san and friends and ladies and gentlemen in Japan, it gives me a great pleasure to be among you all to discuss this very important topic for the world, green and sustainable finance. And I think this is especially timely because COP26 is going to be held very soon in Glasgow. And also in Hong Kong, there's been a lot of debate and discussion regarding how and what we should do to achieve carbon neutrality. So I think it is really a very timely and also very apt occasion when we can brief this distinguished audience what we set out to achieve and how we are going to do that. First of all, in terms of the what, I think it's very clear that we need to achieve carbon neutrality, and we already set out to do so by the year 2050. But of course, in the course of so doing, and into transition from the current economic model to carbon neutrality by that year, there's a lot that we can do, especially in the transition period. And that's why it begs the question as to what we should do in order to achieve that goal. And if you look at the advantages of Hong Kong, apart from the rule of law, apart from one country, two systems, I think there is an added advantage, as you can see now, is about the Greater Bay Area. This is something that's unique to Hong Kong, yet at the same time not unique to the world, because after all, globally, we have already a number of international Bay Areas. And one of them is actually the Tokyo Bay Area, as I'm sure all of you are well aware of. But in terms of our Greater Bay Area, as compared to the Tokyo Bay Area or the San Francisco Bay Area, or even the New York Bay Area, I think one thing is distinguishing us from the rest of the world's Bay Areas is that we encompass both the financial strength of New York, the innovation of San Francisco, and at the same time, the advanced manufacturing capabilities in Tokyo and the surrounding regions. And that's why the next question to ask is how we can leverage this unique advantage of ours and at the same time blend this with our overall strategy to move the economy to carbon neutrality by that year. And specifically for green finance, which is the purpose, the theme for my presentation, this government is pursuing through multiple channels to allow us to take advantage of our role and advantages at the International Financial Center and to use green finance as the means to achieve those broader socio-economic goals. And we do that through three means. First of all, it's about markets. Secondly, it's about regulation. And finally, it's about talent. And I'll explain to this group one by one. First of all, in terms of markets, I think the obvious part of the green finance story will be about green bonds. And my other speaker, Tracy, from the Hong Kong Green Finance Association, and also from Standard Chartered Bank, will be able to shed more light in that regard. But that said, apart from the private sector, we are also encouraging not just our banks, our corporates, but also the government itself to issue green bonds. And so far, we have issued $3.5 billion of green bonds, and they have proved highly successful, all in all, 5 times oversubscribed. And also, in the most recent launch of our green bonds, we have a 30-year tranche. And basically, it broke a lot of records, as you can see in this PowerPoint, being the world's largest US dollar government green bonds. And also, the 30-year tranche basically is the longest tenor US dollar government green bonds in Asia. And at the same time, we have the first global midterm note program ever issued by a government dedicated to green bond. In the coming 5 years, we'll continue to do so and issuing up to $22 billion of green bonds within the coming 5 years, subject to market conditions. But as Hakata-san just mentioned, doing so through the public sector alone is not sufficient. And that's why we need the private sector to move along and also to issue green bonds and grow this market with us. And for those purposes, we have dedicated green bonds and also green loan program to subsidize the issuance of such products here in Hong Kong. And also, if you look at our historical records over the past few years, in terms of the size of green bonds ever issued in Hong Kong, in the year 2020, we already have $12 billion of green bonds issued, as you can see from the lower part of the PowerPoint. At the same time, if you take a cumulative number over the past 5 years, starting from the year 2020, basically all in all, we have $38 billion green bonds ever issued and arranged through Hong Kong. And apart from the quantum, which has been increasing by leaps and bounds, you can also see that there's a change in mix and structure, i.e. in the year 2020, 1/3 of the green bond issuers in Hong Kong are actually first-time issuers. And at the same time, I think there's also transition. Previously, we talked about green bonds. What we normally see are those bonds having money or proceeds and have them applied in specific green projects. But now, as the green bond market is getting more sophisticated, we also see some like sustainability-linked loans and bonds, i.e. those proceeds are not specifically tied to green projects per se, but tied to a set of criteria, could be ESG or other broad criteria related to green economy, tied to the issuer. And should the issuer be able to achieve those targets and also benchmarks, they will be charged a lower interest rate for the loans or for the bonds that they have. I think this is a rather new trend. At the same time, among the 30 approved applicants of our subsidy program, in fact, we see a number of them are actually issuing such sustainability-linked loans and bonds. And moving forward, we'll continue to grow this market segment in terms of using market means to make our green finance ecosystem broader and stronger. Apart from through markets, I think another means I just highlighted is regarding regulation. And we have a cross-agency steering group constituted by the government departments, including mine and also my colleagues in the Environmental Bureau. At the same time, our regulators in the security sector, in the banking sector, in the insurance sector, and also in the pension management sector. So all in all, they work together with the government to chart the way forward in terms of Hong Kong being the next green and finance hub of Asia. And for those purposes, we already have a roadmap and also a strategic plan in place to identify areas across the board. What are the things that we need to work on in order to grow this ecosystem? And one thing on the regulation side that we will subscribe to is the common ground taxonomy now being developed between China and the European Union. Because Hong Kong, after all, ourselves being a small city, we have a rather limited physical footprint. But that said, because we are an international financial center, our financial market footprint is far bigger than our physical presence. And that's why with participation in our market of many European banks, Asian banks, including many Japanese banks and financial institutions, I think there's a role to play in terms of how we can set out clearer and also better regulation to facilitate these entities to comply with these new green standards. And apart from the common ground taxonomy that we will subscribe to, at the same time, we already set out our plan to require relevant industries to follow the climate-related financial disclosure as required by TCFD by the year 2025. So these are the things that we are doing on the regulatory front. At the same time, we need the right tools to enable our institutions and regulatees to comply with these new requirements once they are set out. And that's why, apart from markets and also apart from regulation, the key part is about capacity building, in particular talent. And on that front, the Chief Executive just laid out in her policy address the inclusion of ESG talent as one of the key talents that Hong Kong is looking for from abroad, because it's not just a Hong Kong specific issue, but globally, as the overall economy moves to a greener and also more sustainable future, there's a global demand for ESG talent. And in particular, many of these ESG talents basically commands knowledge and also experience in multiple areas. It could be in engineering, could be in business, could be in finance, innovation, so on and so forth. So on that front, we definitely welcome more collaboration with our friends and also including Takata-san in Japan to grow our ESG talent base and also grow our Hong Kong and Asia green finance ecosystem together. Thank you.
Thank you very much, Christopher, for a very comprehensive, great presentation about the development of green finance policies in Hong Kong. Now, let us move on to Tracy. The floor is yours, please.
Thank you, Takada-san, and good afternoon, Secretary Hui, distinguished guests, and ladies and gentlemen. Delighted to be here today, sharing the latest sustainable finance news globally and in Hong Kong. And thank you for Tokyo Economic and Trade Finance Trade Office for inviting me. Next slide, please. Can we switch to the next slides, please? Oh, yes, one up. That's right. Let's start with looking at the overall growth and diversification of the sustainable finance market. As you can see on this chart, in the past 10 years, we have seen very strong growth in the sustainable finance debt market. In fact, this is one of my favorite slides. I call it from green to rainbow. So the market started with very plain and vanilla green loans and green bond to seeing social bonds and sustainability bonds, which is a mix between social and green, and to sustainability link, which Secretary Hui has mentioned, and to transition. So I'll say from green to rainbow. Just a few highlights I want to make on this graph. As you can see this year, the data on the chart for 2021 is only up to mid-year. So by mid-year this year, we already see that the market volume already overtook the whole of 2020. Second point to highlight is, if you look at the light blue bar, this is the sustainability linked loan portions over the last 3 years. You can see is a very strong growth. So this year, by mid-years, already twice of the total sustainability-linked loan market from last year. And also, as expected, on the back of COVID, we have seen a strong pickup from the social bond area, the gray color of the last 2 years, 2020, 2021. So on the back of COVID, we have seen some use of proceed social bond has developed on 2020, and this year is sustained the volume. So these are the general trends, strong trends of the market. Next slide, please. This Secretary Hui done a very great job on describing the Hong Kong market. So I would just very quickly highlight over the trends of the Hong Kong green and sustainable debt market. It followed the global trend, very strong growth over the last few years. And the diversifications, we can also see that 60% from China issuance and a third from corporate real estate. And last but not least, and Secretary Hui also mentioned the Green and Sustainable Finance Grant Scheme. Let me take a very quick briefing on this one, because the grant scheme is very well received by the market. So if you're first time green or sustainable bond issuer in Hong Kong, together with repeat issuer for the expense on the track 2, you can apply for the grant to subsidize for the expense for, like, for example, your third party SPO certification, etc. So this apply for both loans and bond, and as a commercial bank, we have been applied and approved from this program since the launch of this grant scheme. So it's very well received. Perhaps this is something that from the Japan side we can consider as well. Now, next slide, please. This slide shows how sustainable finance has grown over the year. From the left-hand side, it started from the old traditional philanthropy market to CSR, to sustainability, to the sustainable finance market that we know today. As a bank, as a global bank from the finance sector, as you can see from the integrations of the journey from Standard Charter, we integrate sustainability into our DNA. Let me call out a few. So we fully integrate ESG criteria into all our lending decision, with over 19,000 bank-wide client assessments against our position statement already back in 2019. And we announced our own operational net zero by 2030 and financing net zero by 2050. And yesterday, we have published our net zero plan. We disclosed to the world our own carbon footprints of our whole lending book, and we have set interim target by reducing our high carbon intense industry lending, reduce coal mining lending by 85% before 2030, and we committed to $300 billion in transition financing to help our client to transition before 2030. Concrete action is a must in order to achieve net zero, not just by saying with a commitment, but demonstrating with concrete action. And for our action, there's some echo, so I don't know whether the organizer can manage that. So through our action, we are able to avoid 700,000 tons of CO2 emission from green project finance in the past. Next slide, please. Okay, I can hear echoes on the screen. I don't know whether the others hear the same. So I think the other can put themselves on mute. It will help. Okay, so I just want to have a very quick brief show you what kind of products in the market in sustainable finance. This is what Standard Charter offer. So in addition to the bonds and loan that you've seen in the market, we also offer sustainable deposit, ESG advisory in terms of how we help clients to improve their ESG rating. Trade finance, this is targeting SME, sustainable supply chain, to help the small medium enterprise company to green, to be more sustainable. In addition, ESG derivative and also carbon trading as well. Next slide, please. From here, I would like to share with you a couple of surveys on the Zeronomics survey is one of the reports that we done, and we spoke to over 250 large corporates company and over 100 investments specialists to find out where companies are in their transition journey. Next slide, please. Very quickly, the surveys point out that company, less than half support the Paris Agreement, and 71% indicate they plan to make most progress only between 2030 and 2050, which is really too late. And the key barriers, 67% of companies stated lack of finance, and 70% of investors believe that capital shortfall will happen in high carbon intense industry as expected. Now, how to overcome this? 81% companies believe that standard global, the echo is so the standardized global net zero transitions measurement, disclosure, and rating framework are important to overcome some of these challenges. Next slide, please. Okay, zooming into Asia, in Greater China and North Asia, including Japan. So just highlight a couple of key findings. In Greater China, so including Hong Kong, 50% believe that we are not trending fast enough, and 55% believe that we require high level of investment for transition. On the other side, on North Asia, the sign up to the Paris Agreement is very high. 7 out of 10 has signed up to the Paris Agreement. However, 57% of them and still believe it's not transitioning fast enough. Next slide, please. This is another survey that we did on looking at sustainable investment, highlighting over 2,000 high net worth investor. So in Hong Kong, 70% know what is sustainable investing and interested in investing. However, slightly less than half have not yet invested. This is a global trend. This is in line with global trend. So a lot of interest and action is still treading behind. Next slide, please. Last but not least, I take some questions. As Takata mentions, I'm also the Vice President and Deputy Secretary General of the Hong Kong Green Finance Association. And the Hong Kong Green Finance Association play a very key role as a bridge between the private and public sector. The missions of the Hong Kong Green Finance Association is set up to help to position Hong Kong to be the international leading green finance center. And we now have over 160 institution members as of September. And we mobilize our associations by 8 working groups. So we have the banking working group, which we work very closely with the monetary authority. We have the bond and product innovation working group, which we work very closely with the stock exchange. We have the ESG disclosure integration working group, which we work very closely with SFC. We have policy research, which we really help to make green and sustainable finance policy recommendation to policymakers. We also have green and sustainable insurance working group, external collaboration where we act as a bridge between China, Hong Kong, and international market. In addition, we also have real estate and private equity, which we just added this year on the trend, following the trend of how green sustainable finance investments are going. So with That, let me stop here and I'll happy to take any questions during the panel time. Thank you. Passing back to you, Takata-san.
Thank you, great Tracy, for giving us an overview of the sustainable finance market in Hong Kong, as well as the initiatives taken by Standard Chartered and also the Hong Kong Green Finance Association. Now, let us turn on the Japanese side. Before asking Ethan to talk about the Japanese sustainable finance market, let me briefly introduce the Japanese government's policies and the activity of the Green Finance Network Japan. So now I'll start my slides. Okay. So as many of you may already know, Japan's original commitment under the Paris Agreement was to reduce GHG emissions by 26% by 2030 from 2013 levels. Last October, the Prime Minister Suga announced that Japan will achieve carbon neutrality by 2050. To this end, Japan has upgraded its NDC commitment to achieve a 46% GHG reduction by 2030 and continue further efforts to achieve a 50% reduction. Green and sustainable finance is developing very rapidly in recent years in Japan, and the Japanese government is taking steps to further accelerate the market development. The climate change is increasingly recognized as not only the environmental issue, but also economic and financial issues. So as a in addition to the Ministry of Environment and Ministry of Industry, currently the FSA and the Ministry of Finance are also coming into play. The expert group under the Financial Services Agency published a report on sustainable finance policies in June. And one of the pillars is to establish a Green International Finance Center in Japan. And actually, the Hong Kong Exchange is named as one of the examples we could learn from. And recently, are considering climate issues very seriously in the world. And the Bank of Japan has launched a new scheme to support sustainable finance through its monetary policies. Today, I'm participating in the seminar as the Secretary General of Green Finance Network Japan. The Green Finance Network Japan is an informal network launched in 2018 to bring together the players of green finance in Japan, both public and private sectors. And this network facilitates the sharing of information between members and the organization of events. Also, it functions as a platform for collaboration with international stakeholders. It started from a small group, but it now has more than 340 members from over 160 different organizations, including government ministries, financial institutions, and corporates. The network has convened a number of symposiums which gathered speakers from both the government and the private sector. And most recently, we held an online symposium in June. The Environment Minister, Mr. Koizumi, provided a speech. And in addition to convening our own events, we collaborate with other stakeholders in various events, just as we are doing right now. The Green Finance Network Japan is an open informal network which anyone can join in personal capacity without any cost or obligation. So if you are interested, you are very welcome to contact me. Thank you very much. Okay, so now Ms. Sachie from Mizuho Securities, the floor is yours, please.
高田さん、ありがとうございます。Thank you for giving me this opportunity today. I'm in charge of sustainability at Mizuho Securities. I would like to explain it from the viewpoint of the Japanese market, and let me explain in Japanese from now. Thank you. 資料をちょっと共有させていただきます。
Allow me to put up my slide deck.
はい。みずほ証券の方からですね、
Thank you. For the next 5 minutes or so, I would like to share with you the market situation in Japan. Let me briefly introduce myself. I am currently serving as the head of Sustainability Strategy Development Office of Mizuho Securities. You can see my career on this slide. I started my career with debt capital market, but Japan is seeing increasing amount of green bonds and loans. And that is why Mizuho has established the Sustainability Securities Office. Takara-san and I have jointly participated in some of the seminars. Now let me discuss the situation in Japan. As Tracy has touched upon, globally, green and social bonds are being issued. But this is the situation in Japan. In September 2016, JICA started selling social bond for the very first time in Japan. That was the first of its kind in this country. But back then, social bond was a terminology that was little known. But thanks to the increasing number of issuance by many entities, it has become more widely known. And last year, the amount has risen to 2.3 trillion yen last year, and it is currently standing at 1.2 trillion at the end of the half year. In addition to green bonds, but sustainability and social bonds are increasing. Next slide. You can see different names of bonds, and that has been put in the map. And those of you who are participating in this program must be fully aware of all these types, but most famous is the green bond on the left-hand side, shown in green. Environmental impact is sought after, and project and assets are funded with green bonds or green loans. Next to that, the blue one is social bonds and for social issues. And in between is the sustainability bonds and loans. As I talk to you, there are green as well as transitional bonds as well. Asset may lead to emissions, but thanks to technological development, there is a possibility to reduce emissions. And funding for this kind of project is currently categorized as those as transition bond. In addition to green and transition bonds, there are different types of bonds and loans without any specific goals. And attainment of such and such goal can lead to the reduction in interest rate. And this is how we categorize as environmental linked bonds and loans. And Japanese policies have been well covered by Mr. Takada in his presentation. Bank of Japan currently have climate response financing operations, or CRFO. Back finance by BOJ is often green bonds or sustainability linked bonds or transitional bonds or loans. BOJ support is imperative in pushing and facilitating ESGs. But domestic investors trend is shown on the slide number 5. As far as Japanese market is concerned, SDG market has been grown led by the private sector, specifically the investors. There are two important factors that I need to bring your attention to. Investors are currently trying to reduce the emissions of their investment portfolio. Most salient are major life insurers, as shown on this slide, be it a bank or asset managers. They are also following suit. So when investors are making investment decisions, they are evaluating whether their investment is leading to the possible reduction in emissions. Also, ESG strategy disclosed by issuers. It is not merely the disclosure of the investment or the actions being taken. Industrial transformation is imperative for emission reduction. With this in mind, issuers' possibility of enhancing their corporate value is a key question that needs to be asked. So ESG strategies needs to be embedded in their growth strategy, and that is one of the key factors. And that is what investors would like to know. And this is a new trend that I find very interesting. FSA and other entities are demanding PCD disclosure to evaluate the profitability. But those spearheaders are also evaluating the feasibility of the strategies. And this is the last slide. Major insurance companies' ESG initiatives and actions are listed on this slide. For Nippon Life Insurance, Dai-ichi Life, and Sumitomo Life, and Meiji Yasuda Life Insurance. As far as these major four are concerned, they're very active in ESG investments. ESG endeavor, as you can see in this table, 2030 and 2050 are milestone years, and they are seeking to reduce emission reductions compared to year 2013 or other years, and these are also embedded in their strategies as well. Also, ESG includes not only climate change, but also other social issues as well. But CO2 emission seems to be a very important benchmark for their evaluation. As far as assets are concerned, they're paying attention not only to the stocks, but real estate and debentures. And should this trend be sustained, it will have a positive ripple effect to cover regional banks and regional entities as well. So issuers should be paying a close attention to this trend, and investors are also receiving messages from the viewpoint of their financial and other needs. This also means that engagement between these parties are very important. With this, I would now like to close my presentation on the Japanese market. Back to Takada-san.
ありがとうございます。Thank you, Ms. E, for your presentation on Japan's sustainable finance market. So let us now begin the moderated discussion. And just let me remind the audience that you can put questions by the Q&A facilities in the Zoom. And we've already got a number of questions in the Q&A box. So before turning on to the Q&As, now let me ask some questions to the panelists. So first, Christopher, I'd like to congratulate your effort in Hong Kong government to the issue the government green bond because I know that the financial benefit of issuing a green bond for the issuer is not necessarily very apparent. And I'm aware that in many jurisdictions, actually the Treasury Authority somehow reluctant to issue the government green bond. So just could you tell us what kind of debate you have had before reaching that decision, or was there any obstacle or barriers within the government, please?
Thanks, Takada-san, for the question. I must say the situation here is not as difficult as you described, because after all, the goal to achieve carbon neutrality has been set out for the year 2050. And the next question to ask is how we can get there. And obviously, green finance, in particular, the issuance of green bonds by the government is obvious means. And if you look at so far, the $3.5 billion green bonds that we've issued, it has been oversubscribed for more than 5 times. And in particular, as I highlighted just now, one tranche is the 30-year tranche, which is basically 7 times oversubscribed. And if you look at the investor mix, around 1/5 go to European investors, 1/5 go to American investors, and the remaining 2/3 are two-fifths are actually for Asian investors. So I'm sure that some of them could be the insurers or could be the Japanese financial institutions. So on that front, I would definitely welcome more participation through the financial institutions and also corporates in Japan. And in particular, I also want to highlight that as part of the green finance space, while we talk about money, as a tool to deal with climate risk or even broader environmental risk, finance is just one of the means. Another way that financial sector can contribute is through some risk management solutions or other risk management tools. And the obvious tool will be insurance sector. And that's why recently we witnessed the first issuance of our catastrophe bonds in Hong Kong. It's the first ever catastrophe bonds that we ever issued in Hong Kong. And those bonds those insurance being issued are facilitating our Chinese companies for them to undertake projects in some parts of the world which are subject to climate risk. And also at the same time, I would say that many of the risks that we talk about, like for example, changes in weather or temperature, is not something very distant. Now we have, like recently in October in Hong Kong, we experienced typhoon, which is rather rare for Hong Kong. Normally typhoons are found in July or August. At the same time, previously we have a flooding in Germany, and we also have flooding in some parts of China. So you can see that all these are actually very imminent risk. And also, I think we in Hong Kong are lucky enough to talk about green finance as a means to add value to the financial service sector. But you talk about other jurisdictions like Sri Lanka, or some other developing countries that I witnessed when I attended some of these multilateral discussions. You can see that for these countries, it's a matter of survival in terms of how we can make the environment greener and more sustainable. So on that front, definitely Hong Kong has a role to play, and we are more than happy to collaborate with our counterparts in Tokyo and Japan to do it together.
Thank you, great, very interesting. And now, Tracy, so I'd like to ask you about, so what are the challenges for the Hong Kong's private stakeholders to further develop and promote green finance in Hong Kong? Do you have any requests to the government for further improvements or efforts and support? So now is a very good chance because the Secretary of Finance is there. So yeah, so please give us your thoughts.
Indeed. So thank you, Takata-san. So like I my earlier presentation, I had the Zeronomic report. So the key challenges on transitions is one, lack of financing. Second is not fast enough. So from that end, we really need concrete action instead of just announcements and commitments. So interim, step-by-step concrete actions. Now, we have seen a lot of good actions we've seen in Hong Kong already. Secretary Hui has mentioned our 600 billion Hong Kong dollar green bond program and the formation of the cross-agency steering group, which is two government body, 5 regulator, all grouped together to position Hong Kong as a green sustainable finance hub. And recently, the update or the recent announcement from the cross-agency group have highlighted that the TCFD need to be online across sector before 2025. So etc. So these are all very important. So from the government side, we have seen, and from the private sector side, I mean from the actions point again. We want to see company coming out with concrete actions, start disclosing their carbon footprints and setting target, not just say net zero by 2050, but interim target that we can see them step by step moving toward, and it has to be now, not from 2030 onwards. So we want to see interim concrete action. So banking has a key role to play in this sector because the funding gap is so huge. So we also want to see bank to come out to start coming out with their own action plan, net zero action plan, their interim target, and that is also how they incentivize and also help the client to transitions across the economy. So this concrete action is very important. We have, as I mentioned, at Standard Charter, we have just come out with our net zero plan, and we are sharing our white paper on the way that we calculate, how we disclose, and how what are the interim steps by the high carbon industry sector. So the oil, the coal sector, the oil and gas, and also mining. We are power sector. So we are setting each of the industry, high carbon industry sector, the decarbonization pathway, and our target on how to move to net zero from a bank's perspective, from our lending perspective. And of course, that's not enough. Time is running out. So we want to see more. So in terms of what else we want to see more actions, I think Secretary Hui mentions very well, ESG talent is very important. Everywhere is hiring. We need to incubate local talent, and at the same time encourage international talents to come to Asia to work with us to develop the market. Secondly, carbon market is another very important tool. We believe that a voluntary carbon market, a well-functioned and high-integrity voluntary carbon market can help to fast-track from the high emit sector to the one that helping to reduce, secrete carbon. So this market, we believe that Hong Kong has a key role to play, and the cross-agency has set up a working group, carbon market working group, co-chaired by the Stock Exchange and SFC, to look at what is Hong Kong's role and try in the carbon market center. And last but not least, and I hope, and that is across all governments. Let me share one of the risk-weighted capital incentive that was done in Europe. So in the EU, there's one regulation called 501A, and if you are able to demonstrate both green and social elements as a UK bank, we can have a 25% RWA discount, which is very, very significant to drive and help us to help our client to invest in project financing, large infrastructure that have the environmental and social benefit. And I think, and this actually enabled me to do this kind of transaction across the world. As long as I can demonstrate this, I think this is something that perhaps looking at the RWA risk-weighted capital between green and brown business from the government's angle, that will definitely help the financial sector to lift off, to move, to accelerate the transition journey. I'll stop here.
Thank you very much, Tracy, for your very bold statements. And yeah, actually, particularly your last point is cutting into the heart of financial regulation. So yes, it's a very important issue. And also, you mentioned the carbon market. So just an information in Japan as well. Now, we don't have any national-wide the carbon pricing system, but we are discussing the future introduction of it. But the first, maybe the first, we will try to energize the voluntary based carbon pricing mechanisms by private sector players. So now, Ms. E from Ms. Ho or Isan. So just tell us about the Japan's green finance market. So obviously, Japan's green finance market is rapidly expanding recently, as you described. But to further accelerate that development, what would be needed the both either on the private sector side or on the government side, please?
はい、ありがとうございます。日本でですね、グリーン
here in Japan, in order to accelerate the market of green bond, to begin with, why does Japan need green finance? This question, including us, everyone has to understand that. So I think the atmosphere has to be developed. That is first and foremost very important. With respect to the government side, the green operation of the Bank of Japan is promoting this, not just the finance side, but the corporate can develop the methodology for the decarbonization. Maybe that can be supported by the government side. With respect to the private sector, we have the issuers and the investors. For investors to promote the ESG investment, money has to be made. Now in Japan, if you look at the bond market, interest rate is very low. So, well, you really can't make a lot of money through ESG investment. Now, the climate change might well change the industry structure, but the corporates, in order to respond to the industry structure, if there is a benefit, if investors can make money, that has to be explained. And now the issuers, when they issue a bond, in the primary market, the supply-demand issue is there. In the case of a green, the demand might increase, spread is tight, and the issuance can happen. Well, so the issuers can enjoy a benefit. In the secondary market, in order to enhance the value of corporates, when there's a risk event, the value does not go up or the price would increase. I think that's an important matter. So if investor can make money, that kind of logic or track record has to be developed. In other words, on the flip side, with respect to the issuers, the strategies need to be disclosed. So in order to enhance the corporate value, stories around the dreams have to be explained to investors, not just the financial statements be explained, but why this kind of engagement has to be enhanced further. That's all. Thank you.
Well, thank you. So now let me pick up some of the questions coming from the audience. So unfortunately, we have only a very limited time, so we cannot deal with all questions, but just let me pick up a few of those questions. So the first, this is a question for Secretary Hoy. The measurement of the impact from the green products. As you know, there are many green products coming into the Hong Kong market, but what about those impacts? So do you have any views about the measuring impact or linking it to specific targets such as NDC for Hong Kong?
Thanks for the question. But before I answer the question, maybe I can address some of the points Sachi just mentioned. She mentioned about the low interest rate or the lack of return of the green products here. I can give you a flair in terms of the record that this government has when we issue our green bonds. So far, we have issued 5-year tranche, 10-year tranche, and also 30-year tranche. And basically, the return that or the interest that we pay are from the range of like 22.5 basis points beyond the 5-year treasuries up to 62.5 basis points over the 30-year treasury. So if you talk about in absolute terms, it's around like 0.6135% for the 5-year tranche and up to 2.431% for the 30-year tranche. So you say that in terms of the return, I would say the reason that our green bonds are quite popular is also attributed to the fact that the interest rate that we pay out is actually quite reasonable, at the same time quite reflective of the fiscal strength of Hong Kong. That's number one. And number two, I would say that in terms of the impact of the green products that we've issued, I think nothing is clearer in terms of the disclosure that we've made in our green bond report. Because so far we've issued 2 green bond reports, highlights the impact of the green bond proceeds that we have gathered. And they could be in the form of building our green government departments, and also they could be in the form of building the environmental facilities, like some of the recycling facilities our environmental colleagues has designed. So all these projects are concrete proof and also evidence in terms of how the green proceeds that we have gathered in the form of green bonds are shaping our economy and also our society to make it a greener place for all. And also more specifically, I think if in terms of the more broader market impact of the green products that we have, apart from the green bonds that the government issued and the private sector issued, so far we have over 60 ESG bonds authorized by our securities regulator. And also at the same time, what we observe is that a lot of the family offices and also high net worth families and also individuals are looking for such projects or also such investments. And so, in fact, through this process, we have strengthened our role as an asset and wealth management center for Hong Kong, because increasingly we are gathering a lot of these impact investments from across the world, and they are all willing to park their money here for such investments. Okay.
Okay, thank you. Just let me pick another question. And this is probably a question for Tracy and Ethan. About innovative companies who provide decarbonization technology. So what can we do to make sure the funding goes to these often small and medium-sized companies who are providing innovative technology? So just we are running time. So if you answer very briefly, that would be appreciated. So first Tracy and then Ethan, please.
Sure. So yes, exactly. So we need to make sure that green and sustainable finance product suite can be applied to across the whole capital structure. And bonds and big ticket item loans are not enough. So as I mentioned earlier, if you remember my slide, we also provide sustainable trade product that helping companies innovate from the smaller market side. And in terms of particular clean tech, we believe that carbon credit is another way that we can fast track and channel to inject investment into the clean technology center in a faster manner. And also other structure like fund. We just recently structured a private equity fund where we help to help the private fund to set up the criteria on what kind of environmental, social, governance criteria is required to go into the subset of the company, and those can be tracking on particular smaller size company and in the clean tech area as well. And on that particular fund that we structure, we also provide incentive to that particular fund, and also penalty where we pointed the penalty to the carbon credit market as well, both way, incentive and penalty for setting concrete target company selection criteria into that private equity fund structure.
Thank you. Ethan, please.
はい、ありがとうございます。いわゆるイノベーティブ企業だったり、
Innovative companies, be it small and medium-sized ones, and financial possibilities may vary. But for example, a bank can provide loans with certain risks. So Tracy's presentation was impressive. Or private and public joint loan or positive impact loans from the bank can be an option if the goals meet their requirements. With green or social labeling, bankers may have to share the cost of receiving opinions or evaluations. So impact finance should be backed with some government's help as well. Thank you.
Thank you very much, Ethan, for very good answer. And unfortunately, we are now coming to the end of today's session. So just let me now wrap up the discussion. So the discussion was full of food for thought, and we learned much about the progress being made on green and sustainable finance in Japan and in Hong Kong, and that there are ample opportunities for collaboration between the two jurisdictions. So this seminar is very timely, as Christopher mentioned. This is very timely because it is in the run-up to the COP26, which starts from this weekend. And in Japan's context, also it happened to be just before the general election taking place this Sunday, which will decide the course of policies in Japan in the coming years. And I hope this seminar triggers the debate on further development of green finance in Japan and Hong Kong. Let us thank again for distinguished panelists, the Hong Kong Economic and Trade Office who organized this event, and the audience who participated in today's seminar. Thank you. And now I return the floor to the organizer.
クリストファー・ホイ長官、トレイシー・ウォン・ハリス様、イー様、高田様、本日は詳しいご説明、並びに司会進行を
Secretary Christopher Hoy, Ms. Tracy Wan Harris, Ms. Sachi E, and moderator, Mr. Hideki Takada. Thank you very much for your input, and we thank all the audience. For those of you wishing to ask a question, please contact us via email at the address shown on this slide. With this, we would like to close this mention. Thank you very much.